G'day everyone, welcome back to Pete's Investing. Today is June 21, 2023. This is the Bitcoin price update. The weekly and daily are showing both bullish momentum, so only bullish trades should be taken. We've got also a fail of a divergence, so I'll cover that in a second. First off, on the weekly, you'll notice here the triple moving average of the price chart is aligned with, it's hard to tell, but the CCI 150 moving averages are also aligned with the price moving averages, and that's giving us this bullish signal after a number of weeks of uncertainty. Now, also just to highlight in terms of this lower time frame to be looked at on the daily and hourly, we'll draw a Fibonacci retracement level between that range. You can see there that candle on the weekly has broken above the 61%, and that's a key area to look out for. If it's going to turn down, it's going to turn down soon, otherwise it may well continue to the upside. So this could be the first sign of a long-term move to the upside. So we'll keep an eye on that, but again, predominantly bullish trades on the lower time frames. On the hourly, again just zooming out, you can see there we did have a couple of divergence which worked. You can see there the first bearish divergence worked. It broke below our channel and hit the target. And that target was in that range between the 38 and the 50% retracement of that Fibonacci level. And a second divergence here also worked with a retracement back down between the 38 and 50%. We always take the closest Fibonacci range below the channel breakout, as you can see there when it broke below that channel. There's no other divergence playing out on the daily at the moment. As you can see here, it's also broken above this resistance we drew at 28,460. So that's a pretty bullish area, and you can see there as well the CCI is broken to the upside and it's giving us a daily bullish signal. So predominantly bullish trades only, avoid short trades. On the hourly though, you can see there we did have these two resistance areas. At the first one at 27,389 after our last video update was this dotted line, and we did also draw this bearish divergence on the CCI versus a bullish divergence on the price chart. Now that's failed, although there's no harm done because you wouldn't have entered that, because you can see there it didn't fall below the channel. Remember, the entry is when the price falls below the channel and the CCI continues to the downside. So it didn't fall below the channel, so there's no entry made on the short side. And if we look at the, if I maximize that, see it more clearly, that high there is higher than that previous high, which is what we were doing. So that is no longer a valid, because generally what we look at is we look at the CCI or a divergence where the CCI is different to the price chart. In this case, they're aligned, they're going both long, so that's no longer valid. So we'll delete that, and no harm done in terms of trades or anything else. So let's delete the channel, and we'll also delete the target and that little, just to clean it up. Okay, so where are we now? We're still in this bullish momentum, so only long trades to be taken. Now where it's going to stop, it's difficult to say, but again, we look at the Fibonacci levels. I've already drawn that to the previous high there on the weekly chart. You can see there it's broken above that previous high, above that resistance. So let's look at it going back to this level here, which is probably the most significant recent high. So again, that's punched through the 78% and the 88%. So it may actually approach the 88%, but there's no target area. What we look at doing is trading on this back test here. And again, when the weekly and the daily are aligned long, and as they are now, we only take long trades. So you can see here this back test runs throughout the whole period. So we take long trades when those moving averages on the price chart and the CCI are aligned. And that's where we take long trades. You can see there, if I zoom out again on the back test, predominantly long trades and a few average downs happening. We don't use stop losses, and likewise on the short side there were some average downs. Now the way to avoid those average downs, again, only trade in direction of the weekly and daily. So you can see there predominantly there would have been short trades, with the exception of those little areas there, and that first one there was around September 2022. So around September 22, predominantly short trades. You can see they're predominantly short trades. that was predominantly short trades versus the long trades. So I'm trying to be a conservative and not too aggressive in terms of your averaging down. You can see there the relevant revenue generated over both long and short positions on Bitcoin. So to understand how to trade this and other trading strategies, subscribe to my Patreon page where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching and see you in a future video.